What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is January 24th of 2024. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we're not only going to be breaking down the recent price action with Bitcoin as we pulled back down and found some temporary support at the 100-day, as well as at the big even level of around $40,000. But I want to talk to you guys today about my thoughts on altcoins as we bought our first position in the altcoin market, and it's already up over nearly 15% in less than 24 hours. So I want to spend some time to talk about that, and along with that, the broader sentiment in the altcoin space and what we need to watch for, as well as conduct a sponsored review of Bitdeer, one of the largest Bitcoin miners in the US. So we're going to be spending some time to talk about all that and more. If you guys happen to enjoy the video, consider dropping a like, and let's go ahead and kick things off. So I want to go ahead, kick things off, and talk a little bit here about the trend, guys. Yesterday, with the dip we had of nearly 5% in Bitcoin's price, we officially got the red trend flip here for the Lux Algo signals and overlay indicator. This to me is one of the initial signs, alongside the declining 21-day moving average and this initial pullback in price, that we're probably in for a relatively slow Q1 when it comes to Bitcoin's performance. I think that we are in need of a healthy correction. I don't think it's some doomsday prediction, and I think a lot of people probably feel a similar way, in the sense that, while we might get some kind of rebound here at the 21-day, testing up here towards the 21-day moving average, right, which has declined from around 44K down here to 42,000, I think that there's a very good chance, whether it's at the 21-day or the declining resistance band on the Lux Algo, that we are not going to be setting in new highs for Bitcoin here, probably for the next month or two at a minimum, as we do need to have some kind of healthy correction and a rebuild back up if there is going to be higher prices in Bitcoin. And I'm not saying that either side is guaranteed here. We're in a very interesting period of time, because while we can, kind of track what goes on in the near term, our indicators can really help us know what might happen over the next couple of days, the next week or two. I think that we're in a very interesting predicament here, guys, because while there's this debate about the next narrative in crypto being the halving event, we need to understand how much of this move here was not based off the halving, but off of the ETF announcement, the idea that there was going to be spot Bitcoin ETFs approved. And while they have been approved, we really need to be honest about how those inflows are looking at the moment. Guys, I keep looking at the numbers here, and I have to tell you, they're not getting better and better by the day, but they're getting worse and worse. If you're expecting that what we saw in the first week is going to continue keeping up, as a lot of people have been expecting, well, unfortunately, the results are not matching to that. While markets are open from Monday to Friday, and many people thought this was the first week of the ETF, no, the ETF has actually been live for nearly 2 weeks now. So we have essentially already about 8 days worth of trading since these ETFs initially launched. And the important thing to understand is that everyone is just, unfortunately, the majority of people just look at headlines. And if you look at the headlines, you'll see figures like, oh my gosh, over 100,000 new Bitcoin have been allocated towards these ETF products. But basically 75% of that number is fluff. Because if you look at the net outflows of GBTC, you'll see that there's been over 82,000 Bitcoin removed from GBTC. And there is a near direct correlation here with Bitcoin being removed and Bitcoin flowing into these lower fee products. Now, this makes sense. I'm not saying there's anything wrong with GBTC seeing outflows. It's a given here. Whether people are in an IRA or 401k account, if someone has a large substantial position, they want to redeem the Bitcoin, get it out and recycle it into another ETF product or whatever it might be, to get those management costs out of the way, the 1.5% fee, and cycle into a lower cost product, or just sell their GBTC and move in, right? I don't think there's anything wrong with that, but the reality is instead of 108,000 new Bitcoin being stored in ETP products or exchange traded products, we are only seeing about 25 to 26,000 Bitcoin. In fact, yesterday, we saw a total net negative outflow when you account for GBTC. The day prior, only an increase of 361 BTC, and the day before that, over 3,126 BTC coming out. Ouch. That's not the exciting inflows that a lot of people had expected. What we are seeing, though, is a lot of these new inflows into the ETF products getting outweighed by people who have been overexposed in the GBTC product. Now, I know a lot of people will say, oh, Nick, this is short-term, transitioning, and eventually once people stop selling GBTC, or, for example, a lot of people pointed out towards the FTX estate starting to sell off some of their GBTC as they had a large position in it. This is what's really suppressing prices, and this is what's suppressing the inflows. Guys, to be honest, at the end of the day, I don't think that's the whole story here. I think what we're seeing here, whether it's FTX or whether it's traders, it doesn't really matter. At the end of the day here, what we're seeing is a clear demonstration that there is not some massive surge of inflows. A lot of this is capital being recycled from one ETP product to another. So we need to be completely honest and look at the total net number, because at the end of the day, no matter what narrative or headline or way you want to analyze it, this is the number that matters most. The dark number here, 25,948 Bitcoin. There are 26,000 Bitcoin that are stored in these ETP products that weren't stored before. Yes, we are seeing net growth, but at the same time, we need to see much bigger numbers than that if this is going to be the flagship product that many people had estimated. And unfortunately, we are just not seeing it yet. So hold on, we'll have to see if things change here over the next couple of weeks. But while we had a great breakthrough week at the initial start, it's a question of whether or not we're going to be able to continue from there on out. I want to go ahead here and talk a little bit about Total 3. Total 3 in the altcoin market has come down here towards the 100-day pocket. We got a nice bounce yesterday. This is very similar to Bitcoin as we pulled down from around 49K down towards 38,000, kind of deviating slightly below there. This was my initial cue, seeing how altcoins were holding at the 100-day, seeing Bitcoin hold around that range as well, to initially build my first position. Now, this is definitely, in the grand scheme of things, not all my liquidity or capital. This is a relatively small position, like upper single digit of my cash position. But we did build an initial position in stacks the other day. We are expecting that there's a good chance still in the long term that this could come down to the 100-day pocket, which is still moving up over time, or the 200-day pocket, depending on how long we may chop here. But we basically got a position at 128, so we're already up around 15% in our position. And if you look at the top 100 coins, this was one of the best performing plays over the last 24 hours, one of the best coming out of that pullback in altcoin valuations with a rebound of strength. And to me, that's what I look for here, because while I definitely got some more cash, I'd love to allocate towards the position at lower prices. At the same time, I have to be honest here that when you see strength out of these corrections, that's where you want to put your attention. Don't look for ones that are continuing to decline or stagnating. It should be the ones that those who've got liquidity on the sidelines, who see a discount opportunity, what plays are they chasing? So this was the first position we built here, guys. And again, we're pretty good at spotting how to trade altcoins when we actually make moves on them. I'm very much focused on looking for the right signs. I've traded for nearly 12 years here, so I know how to generally spot those good signs here within price when it comes to altcoins, having traded a few altcoin cycles in the past. If you guys want to get those trade alerts, knowing when we actually buy plays, how much of our portfolio we're allocating, or for example, when we're potentially looking to sell positions, right? We send those alerts out in the Dash Report group. I want to let you guys know to some degree here where we're positioning things and if I'm looking to dabble a little bit. But again, as much as we may believe prices are generally going to go lower here over the next month or two, there may be some plays that buck the trend and are showing some signs of strength. So if you guys want to sign up for the dashboard, you guys can do so at the link down below in the description. You'll get access to the Dash Report and a whole range of other things, including our trade alerts, as well as our percentage portfolio allocation. So a lot of great resources you guys can utilize. Outside of that as well, there are plays like ordinals, which have pulled back a steady amount here from around $91 per coin down to around 54. I think that this has got a very good chance of doing what we saw on STX, breaking that Luxembourg support band, coming into the 100-day pocket. And maybe then, as we'll be basically retracing nearly 2 months of price action for the coin, I think that that's where you can maybe get some buyers coming in. But we also might get a more heavier correction down here towards 30, because that was prior resistance here and here. And if you could actually make that support and build a foundation for higher levels within the 200-day pocket, that would be really good for Ordi. I think that would really set the foundation for this thing to be able to ride much higher. As much as it's nearly purely a speculative play, at the same time, that's where you've got a favorable risk-reward entry. Somewhere, I think, below the 100-day into that 200-day pocket is where I'm going to be looking. And Bonk, another play here again. We talked about waiting for that 100-day pocket. We did get a bounce off there. But notice the weakness and the response here versus the past. So I think there's a good chance you actually get into that pocket and maybe even come down here into the 200-day. don't be too shocked if you get a more heavier pullback on some plays, even if the market starts to stabilize, right? These guys might have, or these plays here might have been, prior market leaders in the past. But if their narratives are starting to wane, if they're not showing up to the plate when there are corrections like this, unlike plays like stacks, which have been doing very well, then essentially speaking, these are going to probably have to wait for bigger discounts before people start to really go long on a lot of these plays. So again, I know we're running through a couple important tidbits to keep in mind here, but my main signal is buy into strength, buy into the plays that are not even waiting for the 100-day moving average, right? A great example, right? We bought here into capitulation around 128. If you dive here to the hourly, I started to see here that the price was starting to trend sideways. We had already had a really nice heavy hitter of a day. Prices were down at that time, just for kind of perspective here, from the prior open. They're already down another I'll get the actual percentage here. Roughly around 4% after already declining 8.42% and 2% the day prior, making a move down to 5.8%. Or to just put this in really clear, understandable terms, this had already come down at that time where I built the entry around 36 to 37%. That for me is a good discount to buy on strength, right? So it was a substantial enough correction here. It got to the point where it was at the same price it was back in mid-December, nearly where it was back here on the 5th of December. So that for me is, again, kind of the range where, hey, I'm looking to buy some discounts here. And I noticed as well in the past that on the Lux Algo indicator, when we snap the trend, right, sometimes on plays like STX, you'll get these fake outs. They come up, they might even set new relative highs, and then they go down for their actual correction. So it's about analyzing price as well. If you guys want to get access to Lux Algo and utilize it in your indicator suite, you can do so at the link down below in the description. I like to use the signal and overlay indicator. As you guys can see here on crypto, I'm usually using the daily time frame, but for more traditional markets, I think the weekly or monthly is probably going to serve you better when you're dealing with larger equity plays that have more time history and also are trading much more longer term trends. But for me personally, I'm going to continue to watch Bitcoin related narratives. This is really one of the few narratives that excites me, guys. And these are not the only plays out there. There will be many other Bitcoin narrative plays. I know a lot of L2 or like infrastructure plays on Bitcoin, some of which have me really excited, some of which are already in testnet phase and are already starting to get out there. But again, above all, guys, we'll not only continue to cover them here on this channel as time progresses, but above all, you guys can also do your own due diligence, track these plays, and make sure you've got the right indicator suite out there that will help you spot that momentum in the market. You can use the moving averages like the 21-day pocket we talk about, and along with that as well, I think the Lux Algo indicator is also going to serve us quite well in that task. Again, there might be a little short-term trade on some of these plays. I think the more fundamental question we need to get to, and this is also going to get into my discussion point on the broader altcoin market and the halving event, we need to ask whether or not there's going to be a sustained rebound on these plays. It doesn't matter if it goes up for a day or two, right? We can make some great short-term trades, but if we can't start clearing through those 21-day moving averages, that's the big question for all of these plays, right? Which the 21-day is now trending lower, so it's easier to do that. If we can't start trending through the 21-day again and making it support and getting the 21-day trending higher, the show could very much be over for a little while, at a minimum, probably throughout Q1 going into the halving event. And this leads me again to talking about kind of the altcoin space. Right, again, we take a look at the last 24 hours, while a lot of plays have generally rebounded in price, there are very few plays like stacks, which are actually up. The majority of plays here are really down they're up in single digit. Some plays are down still in the red here. Nothing too exciting coming out of this dip opportunity. What I think is more important to focus on is like the 7-day here, right? We can see very few plays here actually up over the last 7 days. The overwhelming amount of cryptos down in double-digit territory in the red, many of which can be very much as down as 15 to 20 to 25%. Right? This is, again, guys, I'm not trying to be a perma bear here. You don't see me screaming to the roof to sell everything, but I'm just saying that the trend is clearly weakening here. There's some clear distribution going on from larger players, and volume on the buy side is really drying up that market order buy side pressure. So I want to go ahead and talk a little bit about the halving here, because at the end of the day, guys, I'm going to say something that I think just needs to be said. I've had this discussion with a lot of people around the halving event, and people come and ask me, Nick, what are your thoughts on the halving event? I try to do my best to come at it with a relatively fair approach because the halving event historically has been a relatively significant thing for Bitcoin. And it does make sense from a numbers basis. One point that I always make, even though I know everyone thinks that I'm ultra bearish, I always make a quite bullish argument that while a lot of people may argue that the halving event is already priced in, it's not really a positive event for crypto, I actually think that's relatively false. While there are some people buying in anticipation of the upcoming Bitcoin halving event, the majority of people don't take the time to research about the halving event, to understand the fundamental supply adjustments of Bitcoin. They just mainly buy Bitcoin because it's seen as this alternative asset that goes up. And because of that, really the immediate effect of the halving event once it goes live is where the real price benefits come, because you essentially have this immediate reduction. And this upcoming halving event, it's going to be from 900 Bitcoin being created a day to 450. And still, that's a sizable change in supply and demand to some degree. But prior halving events, as I brought up in the past, have had much larger weighted impacts. And this is where, again, I usually lose the bulls when I discuss about this. People who I think are just as much perma bulls as I may be a perma bear in some people's eyes. The point I bring up here is that in previous halving reductions, while you are cutting the inflation rate in half, the decrease in the inflation rate was much more significant in the past. So when you went, for example, from an annualized inflation rate of, say, 50% to 25%, let's just kind of understand this model from this example, you're removing 25 percentage points of inflation. That's a huge drop on an annualized basis and is going to really help in mitigating new supply from hitting the market and causing potential sell side pressure. However, the new halving event that's coming up here from 900 Bitcoin to 450 Bitcoin is going to be about a reduction of around 165,000 Bitcoin per year. And that sounds like a lot of Bitcoin. But if you put this in dollar terms, it's roughly around, at current market valuations, about $6 billion of Bitcoin. And again, sounds really big, but these headline figures actually don't mean much for Bitcoin when it comes to its price appreciation, because on an inflation-adjusted return, what you're really only doing is reducing the inflation rate from 1.4% to 0.7%. You're not even impacting Bitcoin's annual inflation rate by an entire percentage point. Right? So my point here is that we've gone through all those big halving events. The halving event is getting weaker and weaker and weaker. And we need to understand here, when we're trying to ask whether or not, is this going to be the new narrative or the new topic? I have no doubt this is going to be what people are going to be talking about in a couple months. But is it really going to be enough to drive prices to new all-time highs? Is it going to be enough to get institutions excited about buying into the Bitcoin ETF? To be honest, if you come here for my opinion, guys, and this is the point where it's going to get subjective no matter who you ask, I don't think so. I really have my reservations here, guys, because Bitcoin appreciated massively off the idea that the ETF was going to be this massive vehicle. And until that starts to change, until we start seeing that in the numbers, I'm not just going to go off of hopes and dreams of what I would like to see. Trust me, as much as the next person, guys. I know many people think I want prices to go down so I can buy it at a discount. I just bought a position today in stacks. Yesterday, technically speaking, but you get my point here. I can go long, later in the process, make great returns. In altcoins, I can make within a week or two what people have made in Bitcoin over the past year and a half. I don't care about catching absolute bottoms or catching falling knives. And I certainly don't want to fall in love with positions and believe in theories that the number goes up and to the right all the time. It's just not true. Right? And we need to be very realistic about our expectations as we go into a potential recession, and especially if we are not seeing through the publicly available data whether or not people are actually buying in. Because if we don't have a lot of that demand coming in from the ETF, I don't think the halving event is going to save price. I don't think that 450 Bitcoin adjustment and daily supply is going to make much of an impact. We certainly aren't seeing it here within the ETF on some of these days where we're getting 10,000. 5,000, right? We're not seeing some major move. And unfortunately now that surplus of benefit from the ETF is fading, at least in accordance with the past week, the most relevant information we have here. That could change, but we got to see it in the numbers first before I'm going to get really excited. I got to start seeing some big heavyweights actually coming in and purchasing this, because now they have the ability to do so. There is no other narrative as sizable and impactful as the ETF that is going to play out here in the next year. And because of that, we can probably expect prices are going to move lower. So Anyways, I rambled on a good amount here today, guys. I hope this proved valuable for you, but I want to go ahead and dive into one of the companies that is heavily involved within the Bitcoin mining space, and it has relevancy to the topic of the halving event, and that is none other than Bitdeer. So let's go ahead and spend some time to dive into the review. Alrighty, everyone. So in today's sponsored review, I want to spend some time to talk about a company that not only interests me personally, but is leading the way forward in two major transformative industries that we keep our eye on here on the DataDash channel. Today, we're talking about none other than Bitdeer. Now, for those of you who are hearing about Bitdeer for the first time, Bitdeer is a leading provider in not only AI-related services, providing graphics processing units or GPU power, but along with that as well, providing different types of cloud mining solutions for those who are interested in Bitcoin mining. Both of these sectors have been hot over the past year, and I think they're only going to get bigger into 2024. So that's why I want to spend some time today to talk about why I believe Bitdeer is well positioned fundamentally from its team and its focus as a company. But outside of that as well, I want to talk about why I'm excited about these two industries over the long term and how they stand out against the competition. We got a lot to unpack here in today's video, so if you happen to like it, consider dropping a like, and always remember, guys, that this is not direct financial advice. You guys definitely need to do your own due diligence, but I hope that this video can serve as a good primer as you go through that journey of learning about what Bitdeer does as a company. So I want to go ahead and start off with a little bit of a primer here. Both of these narratives are red hot here. AI, or more specifically generative AI, whether that's creating art or generating prompts for programmers, or along with that as well, crypto mining solutions. Both of these sectors have been high in demand here, and they've continued to really grow over the longer term. So if you're interested in the core technologies themselves, you need to get down a couple layers in understanding what's actually facilitating these things. It's not just the companies that are building these large language models, or along with that as well, these various crypto networks and various projects, but we need to understand essentially how all these run, and it runs through computational resources. Every time you send a Bitcoin transaction, there needs to be ASIC miners on the network who are mining and validating blocks, aiming to get that block reward for Bitcoin that we talk about during things like the halving event. And outside of that as well, when it comes to, in this case, AI-related services, you need excessive amounts of highly trained and well-built GPU models built by companies like NVIDIA in order to actually facilitate all these AI generative services. Well, when we understand this, we start to understand that companies like Bitdeer are not only essential, it's imperative not only to understand fundamentally how each company operates and how it plans to stay ahead of the competition, but also who's leading up operations at the company. These two factors alone can be a make or break reality for the success of the company long term, because there are obviously a ton of people who want to break into providing computational resources for these very high demand industries such as AI and cloud mining. But we need to understand, though, that because computational resources can be facilitated and provided by practically anyone, it's imperative to understand that it's a very cutthroat industry with very tight margins. So you need to have people who are constantly, not only with their brains, but also with their business strategy, applying capital and resources towards making sure that they provide the best quality services at the lowest possible cost at scale. That's why we need to understand fundamentally that Bitdeer is well positioned in this regard. They've not only been around since 2018, so much longer than a lot of the AI facilitation services as well as a lot of the mining companies out there, but outside of that, they've become a leading player on the industry stage. They have over 5% of the committed Bitcoin hash rate to the network at any given time. And outside of that as well, we operate over 6 mining farms worldwide. Now, this has been able to happen because they have an incredibly strong leadership team. In just a matter of less than 5 years, they've been able to scale up here to such large operations because they have some incredibly powerful people behind the company. One of the biggest ones being Jihan Wu. Now, if you guys don't know Jihan Wu, he is not only the founder and chairman of Bitdeer, but before that, and since back in 2013, Jihan Wu was one of the early stage adopters of Bitcoin mining, and more particularly heading up as a co-founder of Bitmain, one of the largest mining companies in the crypto space. He was heading up the leading revolution of ASIC miners that allowed for high excessive computational resources and hash rate to be contributed to the security of the Bitcoin network. It's imperative to understand that Jihan Wu is one of the most innovative players when it comes to the mining industry, and there's a reason he's continuing to contribute to companies like Bitdeer, which he founded as a company to facilitate and stay ahead of the curve on these industries. You need to understand that at the end of the day, when it comes to ASIC miners and the innovation of ASIC miners and the crypto industry more particularly, that whoever is leading the way forward in research and development on making the most efficient miners is going to be the leading dominant company. And this also plays a role here when it comes to facilitating GPU services for AI, as well as cloud mining solutions in the crypto space. They also have as well Matt Kong, who has been heading up CEO as far back as 2021, and has continued to emphasize this focus on research and development within the company, having 10 years of experience at companies like Baidu, Yahoo, and Tencent. So there's a lot of strong leadership here at the helm here of what Bitdeer is aiming to provide to its clients. And as I mentioned earlier, they cover a wide range of different services from their various plants across the world. They have many in the United States, as well as different areas across the world, a large amount of computational resources for a variety of key use cases. One of the big ones being the focus on generative AI. Now, if you're looking to run large language models or LLMs or run complex AI related operations, you need a lot of GPU resources in order to pull that off. And using traditional GPUs just won't get you that far. Well, in the case of Bitdeer, they're able to offer cloud-based NVIDIA DGX H100s. These are the premier generative AI solutions in the GPU market. So instead of using a traditional GPU, an NVIDIA graphics card that I might utilize for video games or utilize for rendering my videos, these are particularly tailored cards that allow you to run highly complex large language models and do various complex AI related services. This is one of the best offerings on the market here, providing some of this cutting edge technology so that you can actually run large scale operations at scale. But beyond AI as well, we obviously know as well that Bitdeer has a large amount of experience when it comes to cloud mining facilitation. With Jihan Wu and his current leadership at the helm, they're able to provide some of the most competitive mining services on the market. There's a reason they run over 5% of the existing hash rate of the Bitcoin network. And with a heavy focus of over 25% of its capital being invested into research and development, they're able to stand out on the top, providing some of the best offerings when it comes to cloud mining. Essentially, for those who don't know about what cloud mining is, this is a way where you as an individual could participate in a mining operation that essentially Bitdeer operates for you. You have a fractional ownership of the hash rate, depending on your commitment towards it. And essentially from there, you don't have to worry about the rudimentary process of managing miners. Not to mention, if you try to go out there on your own, it's usually not as cost effective as working through a provider, because they're able to not only bulk purchase ASIC miners, which are required to really be able to make any kind of serious return in mining for various networks, but outside of that as well, they're able to get usually access to much cheaper electricity and know how to actually run these operations at scale. With Jihan having experience well over a decade at this point, I think it's clear here that Bitdeer as a company is definitely well positioned here in order to offer some of the most competitive hash rate plans on the market. And along with that as well, if you're looking to run an operation at scale when it comes to crypto mining, they're able to provide custom data centers so that you can run a large operation at scale yourself, utilizing their years of expertise and know-how in the industry. So I think that this is really cool, the fact that they're not only offering their services in order to streamline it for people, but also to help people if they want to run much larger operations, especially for enterprise clients. So this gives three main verticals here where Bitdeer is standing out against the competition across a whole range of companies. And whereas a lot of miners in the crypto space have not been able to really innovate, and a lot of companies are not leading the way forward and providing the best quality services for AI, I personally think that Bitdeer has a really solid offering here. It's definitely a company you should be keeping on your radar, and one that I think has the solid leadership to be able to continue standing out on top in an industry that is so desperate for innovation and constantly striving to lower costs in order to stay ahead of the competition. So if you guys are interested to learn a little bit more about it, I'm going to leave a link down below in the description where you guys can check out Bitdeer. I recommend you guys do your own due diligence into the company, take a little bit further a look into it, and let me know what you think down below in the comments as well. But until the next video, everyone, thank you all so much for tuning in, and if you enjoyed this, consider dropping a like, and I'll see you guys in the next video. Take care, everyone.